Hello, future auditors. I welcome you all to this amazing journey that we are going to take together for CA Inter Auditing paper. Now, the name of the subject that we are going to take, paper number 5, is Auditing and Ethics. And before I start with the details of this subject, okay, I will give you a brief insight as to how the pattern of the paper might be in your upcoming exams. Why am I using the word might? Because of course May 24 is going to be the first attempt under the new syllabus. Only after the exams we'll have a good clarity as to how the paper is going to look like. But yes, of course, I'll be able to give you a fair idea as to the pattern of the paper. Okay, all of you know this, that this is going to be your paper number 5. All right, so we have paper number 5, auditing and ethics. Okay, and we can divide the subject, or let's say the paper pattern, exam paper pattern, into two parts. All of you know this, that part 1 of the paper is going to be MCQ. Okay, so we have MCQs, and that will be of 30 marks. Yes, 30 marks. Okay, and part 2 of course is going to be the descriptive part. Okay, and the marks is 70. All right. Now, under the descriptive section, also, guys, up until now, what was happening is basically they would ask you 14 marks in the form of correct, incorrect, or let's say true and false. And then the balance marks basically would be the subjective portion, the 5 mark question and all 4 mark question they might ask you. Okay, so yes, what we have to now understand is the good part, that this paper has MCQs, 30 marks as MCQs, and there is no negative marking. Okay, but to score extremely well in this MCQ section, guys, we have to have a concept super clear. And I assure you that when you watch my lectures, okay, in the sequence that I teach, I guarantee you, I assure you that your concepts would be super clear. Okay, and because of that clarity in the concept, I am very sure that you shall be able to score extremely well in the MCQ portion. I mean, of course, in the descriptive part as well, but yes, in the MCQ portion also, you'll be able to score the maximum. And this is what my past students, they have been doing. People have scored, in the last attempt itself, students have scored 80 plus also in the auditing subject, and this has been possible only because of introduction of MCQs, and since there is no negative marking. All right, now in the descriptive part also, okay, how shall we be able to score well in this part? So let me tell you guys that the classes, okay, how am I going to proceed with it? So number one, I shall be focusing on the clarity, on your conceptual clarity. We shall understand things very practically. I shall discuss all the practical applications, all the concepts, very practically, so that you have the clear, crystal clear concepts in your head. But very honestly, only by having the concepts clear also, probably, in the subjective part, we'll also, just to score well in the subjective part, we shall also be solving, or let's say practicing, all the past questions, all the questions that has been given in the new study material, case based questions, everything we shall be discussing, right? So again, let me just repeat, how will the flow of my lectures be? Number one, I shall be focusing on the conceptual part. Then once you understand the concept, etc., we shall be practicing the questions. Again, let me tell you, the past questions, the MTP questions, the RTP questions, revision papers question, the past examination questions, and also all the questions from the new study material. So this is how comprehensively we shall be covering the entire subject. Okay, all right. But yes, I have few points to tell you before you actually, before we commence or we dive into the subject. Now, if you're watching my recorded lectures, if you will be watching my recorded lectures, I have few things to tell you, or let's say they are rather, I can call them as prerequisites, okay, that you have to take care of. Now, what are those prerequisites? Don't worry, no prerequisites as such, but yes, there are few things which I wish to tell you, so that you can increase the effectiveness, efficiency of the classes can be more productive and fruitful to you. Okay, now what is it that we have to do? Number one, guys, I would always say, and I tell this to all my students, be it final students, intermediate students, that when you start watching the lectures, number one, please ensure continuity. What I have seen is many students, they would watch lecture number one on first day, they are in full, enthusiasm, with full josh, they will watch. On the second day also, perhaps they'll watch lecture number two, likewise. But then, as and when, 1 week passes, then they'll start missing on the lectures, they'll take a gap of 2 days, and then the gap is going to go up till 3 days, and then you lose momentum. So don't do that. I'm not just saying this for my subject, but any subject that you're watching at your home, you're watching the recorded versions, I would strictly, ask you, or rather, request you to follow the sequence, or let's say be consistent when you're watching the lectures. Okay, all right. So this was the first point. Secondly, guys, in my course, in these lectures, I would request you to keep a register, a copy, and a pen always handy, because in the subject of auditing, especially at the intermediate level, I would make you write a lot of notes, handwritten notes in the class, apart from the books that you have got or you might be getting. Apart from those books, we will also write a lot of things in the class. Why am I going to make you write? Because I feel when you write things by your hand, you are able to understand them well, and also you tend to improve your writing skills, you tend to improve, or maybe use good vocabulary, or write words in the subject of auditing. So I'm not going to make you write like 400, 500 pages, let's say around 100, pages, which will help you to have a solid grasp of the terminologies of audit, and you'll be very much comfortable, and this is going to help you immensely in scoring well in the descriptive portion also. All right, so yeah, first thing which I told you was to maintain consistency. Second is keep a copy and register always handy when you are watching my lectures. Okay, and third point is that you when you watch the lectures, try and watch it with all your attention, guys. Okay, I mean, don't, if you watch it, if you're watching my lectures on the laptop and then your phone is also on and you're watching reels also along with my videos, no, please don't do it. Avoid all sorts of distractions. Okay, and I assure you, if you follow all these instructions, you would be able to score really well in the subject of auditing. And I've told you already that people have scored 80 plus also in this subject. So this is going to be a super scoring subject, provided you follow to all my instructions. Okay, all right, guys, so now I believe that you are all set, and let's get started with the subject. Okay, all right, so the name of this subject is auditing. All right, now what is meant by the name of the subject is auditing and ethics. Okay, so I'm taking one word at a time. Okay, I'll first today focus only on the word auditing. Okay, and later on, maybe after 3 or 4 lectures, I'll focus on the word ethics as well. Okay, all right, so what is meant by the word auditing? I just want a generic answer. A generic, what is meant by the word, what is the general meaning of the word auditing? So in simple words, if I say, guys, auditing, the generic meaning is to verify something, is to check something, is to, let's say, examine something. Okay, so I'll just write what is the generic meaning. Let's say to examine something or to verify something. Okay, I'm just writing it in a very layman's and generic term. Okay, so auditing simply means to check something, to examine something, to verify something. Okay, now in CA intermediate level, when we study the subject of auditing, our focus would be basically to examine, or let's say verify, or let's say audit we are going to focus on auditing the financial statements. Okay, so we are going to learn in this subject, we are going to learn as to how we can audit, or let's say check, or let's say verify the financial statements. Okay, though auditing is a very big term, maybe in the final levels you'll understand that okay, a lot of other audits can also be done, but in the intermediate level, primarily our focus would be basically auditing of the financial statements. Okay, all right. So I'll go into the details of the word auditing as well, but let me just give you a fair idea as to what all we have to study and how are we going to proceed with it. Okay, so as per your ICI material, the new syllabus ICI material, guys, we have 11 chapters. Okay, we have 11 chapters. All right, and in my book, in the book which you have got, you will see one extra chapter which I name it as chapter 0, which I call it as the fundamentals. Okay, now this extra chapter, in this chapter, we shall only be discussing about few basic words. Those words you are going to come across in almost all the upcoming chapters. So I would want that those words, those terminologies are extremely clear in your minds, and then when we read the respective chapters, you shall be super comfortable. So this is just one extra chapter which I have added. Don't worry, it is only for your understanding. Once you gain understanding of the concepts, you don't have to study it for the exam. Okay, it is a basic fundamental chapter. Okay, and in total, guys, we have 11 chapters, and the books, basically you must have got 2 volumes of books. So I've divided into 2 volumes. Okay, all right. Now we shall be discussing, I mean, in today's session and in few more upcoming sessions. Okay, we shall only be discussing, we shall not be starting any chapter, but we shall be discussing only about the fundamentals, wherein I'll teach you few important words or what is actually auditing. All these things we are going to cover up. Okay, so with this, let us finally start. Okay, let us finally start or dive into the world of auditing with the chapter of fundamentals. Okay, so let me quickly open the chapter of fundamentals for all of you. All right, now, yes, in the fundamentals chapter, as you can see that I have mentioned certain audit terminologies. Okay, so we have some terminologies to be discussed. So we'll start with what is financial statement, who can be the users of financial statement, and likewise, if you can see, we have a lot of terms to understand. And once you have a thorough understanding of these words, we shall start with the chapters as given in the ICI material. Okay, all right, guys. So when I was discussing about the name of the subject, auditing and ethics, I did tell you that our focus area at the intermediate level would be on basically on auditing the financial statements, on checking the financial statements, on verifying the financial statements, right? So let us first understand what is a financial statement. Hey sir, what are you teaching? We all know what financial statements are. Yes, I know that. Yes, you have passed the foundation level, you are good at accounts, you must have by now done so many subjects pertaining to group 1. You already know what financial statements are. I know this, guys, but let us just quickly go through the term once again. Okay, so all of you know this, that financial statements refer to set of statement containing financial information. So financial statements means it is a set of documents which contain the financial information, right? So easy. Yes, but what all things are included in financial statement? All of you know this, that it includes a balance sheet, or we can call it a statement of affairs. It includes statement of profit or loss, it includes the cash flow statement, it includes statement of changes in equity, not applicable though for all companies, but let's say listed companies, India's companies, etc. So for some companies we have to come up with statement of changes in equity also. And then the last part is basically the financial statements will also include the notes to the accounts. Yes. So what are the 5 things that are included in the financial statement, guys? The 5 things: balance sheet, P&L, cash flow, statement of changes in equity, and notes to accounts, right? So all these constitute the financial statement. Sir, we all know this. I know, you know it. But now what I'm going to tell you is you have to keep in mind, guys, you have to understand this, that it is the management, let's say, let's talk about a company, okay. Let's say we have XYZ private limited, okay. So who is going to prepare the financial statements of XYZ private limited? Of course, it is the management of the company. Shareholders will not prepare, right? So please understand who is responsible for preparing the financial statements. Who is responsible for preparing the financial statements? Responsibility for preparation and presentation of financial statements is that of the management of the enterprise. So if it is a company, the management of the company will make the financial statements. Okay. So please always remember, the financial statements are made by the management. Okay, many people think that the auditor is going to make the financial statements. No, the financial statements are made by whom? The management of the company, and the auditor comes and checks them. Okay, so we'll come to that later on. Okay, let me just go ahead with the story in a sequence first, and then you'll understand everything. Okay, so why did I take up the definition or concept of financial statement, sir? Because in intermediate level, you are going to learn about auditing the financial statements. So you should be knowing that yes, management is responsible for preparing the financial statements. Okay. All right. Now, why would management make the financial statements? Very simple question. Why would the management of a company even make the financial statements? Okay. All right. So there might be a lot of reasons, right? And they will make the financial statements because there are a lot of users of financial statement. There will be a lot of users of financial statement. Okay, now who can be those users? Okay, let us understand this. Sir, what are you teaching? Please, just for few minutes I am going to teach you the very basic things, and then we shall, out of the story that I'm going to tell you, we are going to understand the need and the concept of auditing. Okay, all right. So I told you that financial statements is the responsibility of the management, but why will they make it? Okay, so because there are certain users of financial statement. Okay, now these users will take or make decisions based on the financial statement. Sir, who can be the users? Let's say there is a company XYZ limited. Okay, and maybe seeing the financial statements only, I would think of investing in the company. I would want to become the shareholder of the company. So I have to understand the financial statements. Okay, whether the company is a strong company or not, and accordingly I'll take a call whether I want to invest money, whether I want to become a shareholder of that company or not. So likewise, there are a lot of users of the financial statement. So for example, I told you about shareholders, right? Now, government, how would government be, assured that okay, you are paying the right amount of taxes, that the company XYZ limited has paid the right amount of taxes? Government would ask for the financials. Hey, show us your balance sheet, show us your profit and loss account. We'll check how much profit you have made in this year, and then accordingly you have paid the right amount of taxes or not. So government is also going to use the financial statements. One of the users of the financial statement would be what? The government also. Okay, so in this fashion, in this manner, we have a lot of users of the financial statement. So first, let us learn about the users also, and then you'll get to know why even I am discussing the about the users of financial statement. Okay, let's first understand. Now, who can be the users of the financial statement? Number one, management themselves. Sir, you told us management prepares the financial statement. Yes, they do. But then will they use their own financial statements? Yes, of course. Guys, imagine. Okay, I'll tell you a story. Uh, my friend, okay, his name is Chintamani Kumar. Okay, my friend Chintamani Kumar. He wanted to start a business, and then for that, he asked his father, Father, can I please get a loan from you? I want to start my business. Okay, and the father told him, okay, yes, all right. So father gave his son Chintamani Kumar rupees 10 lakhs to start a business. Okay, now Chintamani Kumar, with all enthusiasm and full excitement, he opened his shop, and he did an investment, and he started his business. Now, his father used to often ask him, hey, how's your business going? Are you preparing the balance sheet, P&L, etc.? So he always used to say, no, no, Papa, the business is, we have just started. So I have not yet prepared the financials. I have not prepared the balance sheet, P&L. And, we have few customers. So I know everything. I remember everything in my mind. Okay. I don't need to make the P&L. I don't need to make the balance sheet. After 6 months of time, father again asked, now that 6 months have gone since you started the business, have you made the financials? Have you made the P&L? Do you know how much money you are making or you are losing out the money in the business? Are you making losses or profits? Do you know it? Chintamani Kumar was like, no, father, don't you trust my abilities? We are doing good. Trust me, we are doing good because the business has not flourished so much. I don't think I need to note everything down and make financials. I remember everything in my head. So don't worry about it. Okay. Now, towards the end again, maybe Chintamani Kumar, you know, wanted to invest some more money because his money were blocked, let's say in debtors, in stock, etc. So he went to his father again. Father, can I have some more money? Father was like, why Chintamani Kumar? Why do you need more money? He told that, okay, our business, probably my money is blocked in debtors and stock. Then Chintamani Kumar's father was like, okay, I might think of giving you more, but then since almost a year has passed, prepare the financials first. Let's understand how you are doing your business, whether it is, giving us good results or not, etc. Chintamani Kumar again was kind of furious. Hey, father, you don't trust me. Okay, okay, wait, I'll make the financials. I'll come back to you by evening and then we'll discuss. Okay, great. So now Chintamani sits down and he starts making the financial statements, etc. And then by evening, very happily, he comes to his father. See, you were doubting me. I have prepared the financial statements. Chintamani's father was like, good that you have made the financial statements. So he starts reading the financial statement. So he sees that his son has made in the entire year, the profit was coming to 30,000 rupees. Chintamani was very proud. Father, see, you think that I am good for nothing, right? But see, I have made a profit of 30,000 rupees. We are not in a loss business. I am doing good. We have done a good job. Father was like, calm down, Chintamani, calm down. Okay. How much money did we invest in the business? Chintamani was like, Father, you gave me 10 lakh rupees. So we have invested 10 lakh rupees. Fair enough. Okay. And then again, father asked, so upon investing 10 lakh rupees, we have earned how much? 30,000 rupees. Only 30,000 rupees. So again, father asked, Chintamani, what is the return on investment? Chintamani does some calculation and all, etc. Father, we have earned 3% return. 3%. Then father explained, Chintamani, come down, sit here. This is the reason why I was asking you to prepare your financials from day one so that you can have a track on your returns, track on your business. Father, why are you asking this? I have made a profit. We have made a profit of 30,000. Chintamani, you have made a profit of 30,000. You have put in so much of efforts, but you have only made a return of 3%, profit of 30,000. If you would have invested this 10,000 money, 10 lakh rupees in the, in fixed deposits with the bank, you could have got 6% returns, 60,000 rupees. By doing nothing, you could have just, be at home, watch TV and Netflix, and then you could have 60,000 rupees. But now every morning you go to the shop, put in the efforts from, let's say, 10 in the morning till 6 in the evening, and then at the end of the day you have earned only 30,000 rupees. So this business is not at all viable from my angle. Now Chintamani actually starts doing chinta. He starts thinking, Papa is right. Father is saying the right thing. I should have checked, or let's say made the financials from day one itself. That would have helped me to track my business, right? So try and understand, why did I give you all this, gave you all this story of Chintamani? Because when you make the financials, management makes the financial statements, and when they make the financial statement, they are able to track everything. They are able to track their progress, etc. So the first user of the financial statement is the management themselves. See the point. Number one user is the management. They are able to take day-to-day decision making, and they are able to evaluate their performance. Very important. Why will management use their own financial statements which they have made by themselves? It will help them to evaluate their own performance. Okay, so this is the reason why management is the user of financial statement. Okay, then second is shareholders. Guys, all of you know this. Okay, now again I'll tell you. Let's say we have a company again, XYZ Limited. Okay, and we have a lot of shareholders of these companies. These people are, let's say, the shareholders of the company. Okay, now all of you know this, that shareholders actually put in their hard earned money in the company. Okay, they invest in the company, but they are not the ones who actually run the company. They are not the ones who decide into the daily affairs of the company. For that, we have somebody else. We have the management. Okay, let me write it in this way. Or let's say we have the directors of the company, or let me write the word management. Right, so we have the management who basically takes the day-to-day decisions, who run the business. Okay, but whose money is put into the business? The shareholders money. Right, so guys, when management will make the financial statements of XYZ Limited, of course the shareholders would be interested to see the financial statements. They would want to know whether the company in which they have invested their money, is it prospering or not, is it earning good money or not, is it growing or not. They will be always interested, right? So shareholders are also one of the users of the financial statement. Fine. Okay, who are the other users? Let's understand. Sir, employees. Employees, how can employees be interested in the financial statements of a company? Let's say XYZ Limited. Will the employees of XYZ Limited be interested in the financials of XYZ? Yes. How? See, if I am an employee of XYZ Limited, I would want to know again whether the company is growing or not, whether the company is having good sales or not. Because if the sales are going down for this company, if they are not making adequate profits, they might run out of business soon, and my career might be at stake. So employees will always be interested in the financial statements of their employers, I mean the company in which they are working. Okay, so employees are also one of the users. So why would employee be, using the financial statement? To assess the growth prospect, because if the company grows, then only they might also grow. Okay, so yes, what all have we covered now? I told you that yes, there are different users of financial statements. So I've taught you about three users. Who are the three users? The management themselves, the shareholders, and the employees. Okay, apart from this, guys, there can be many other users, like for example lenders. Let's say bank. Okay, now let's say my friend again, Chintamani Kumar needs some money for his business. Okay, not that business. Okay, forget that example now. Chintamani Kumar has a business and he needs some more money. Okay, and he goes to the bank for some loan. Okay, now bank will not give Chintamani a loan just by seeing his face. Okay, bank would of course need an assurance that Chintamani will be able to repay their loan, will be able to pay the interest timely. So bank would also ask for the financials. Hey Chintamani, sir, we need your financials. If I am the banker, if I am the bank manager, I would ask Chintamani, sir, please give your financial statements. We would assess your financial statements, we would see your position, and then determine about the loan, a loan amount, interest, about the conditions of the loan, right? So even bankers might need your financial statement. So even lenders, the bankers are one of the users of the financial statement. By seeing your financial statements, they would know whether you have the capability to repay their money, whether you will be earning, you have good earnings, or let's say you have good prospects in the future to earn and return, or let's say repay the interest and the installment. Okay, so even bankers, the lenders would be needing the financial statements. Okay, so why would the lenders or bankers use the financial statement? To determine the financial position and the strength of the entity. All right, okay, now suppliers, XYZ Private Limited or XYZ Limited, if they want to purchase something on credit, if they want to purchase raw materials on credit, so before the supplier gives credit to XYZ Limited, Supplier would want to get an assurance that this XYZ Limited is not a fraudulent company. They will be paying us. So they might also ask for the financials. Okay. Supplier will ask for the financials to determine what the credit worthiness of the company, so that they can send the raw materials or any other order on credit basis, right? Okay. Then we have customers also. Hey sir, what you are saying? Customers also check financials or what? Sir, you'll have to think about it. Okay. Now, for example, I am using an Airtel's phone. Okay. I mean, my SIM is my service provider is Airtel. I am a customer of Airtel. Did I ever check the financial of Airtel? I am a customer. Before buying Reliance SIM card, Geo SIM card, did you check the financials of Geo? No. Sir, yesterday I bought a chocolate. Which company? Cadbury. So you are a customer of Cadbury. Yes, sir. Did you check the financials of Cadbury? No, never, sir. So what are you saying? How can customers even check the financials? Why will they even check the financials? Now, guys, this is not for small customers like us. We are retail customers. Probably we are happy eating chocolate. We'll eat it without going through the financials. But let's say if I am a customer and I want to give you a very big order. I'm your customer now. I want to give you a very big order. So maybe before giving you the order, I would want to see whether you have that fulfillment capacity, whether you'll be able to fulfill my order requirements. So for that, maybe I'll assess your financial statements, whether you have those assets, whether you are strong enough or not, right? So customers also sometimes may refer you to the financial statement. So to know the general business viability before entering into any long-term contract. So before I give you a big order, okay, I might want to check your financials. I might want to see your strength, and accordingly, I will place the order. Okay. Fine. All right. Sir, government, yes, government are also the users of the financial statement. They would be interested in your financial statement for the purpose of taxation. Okay. So to ensure prompt collection of both direct as well as indirect taxes, income tax, GST also. So they would use our financial statements. They would check or assess our financial statements. Okay. Now, few more points. Prospective investor. Okay, somebody has already invested, is a shareholder. Okay, and somebody who's thinking now to invest in XYZ Limited, like for example, I want to apply in an IPO, or I want to become a shareholder of XYZ Limited. I'm thinking of buying the shares of XYZ Limited. In this case, what is going to happen? In this case, I'll see the financials of the company first. I'll see whether they are doing good, or whether they are growing or not, whether they are having good profits or not, so that I can get some dividend. So all these things I'll check, right? And then probably I'll decide, yes, let's invest in the company, or maybe I might not even think of investing, right? So not just the shareholders, guys, a prospective investor would also, before investing, assess the financials, right, before investing. So why would a prospective investor do so? To assess the solvency and future prospects of the organization. Okay, so these are, guys, some of the users of the financial statement. And then we have some research analysts, scholars, etc. So they would analyze our financial statements, and then they'll use it for their own study, research, etc., to come up with some data, trends and patterns, etc. So even the scholars, the research companies also use the financial data, right? Okay, so in the fundamentals, what did I teach you up until now? I just taught you that there is something called as financial statement, okay, comprising of the balance sheet, the P&L, the cash flow, the statement of changes in equity, and the notes to accounts. Who is responsible for making these documents, these financial statements? The management of the company, the management of the entity. They will make the financial statements. And once they make the financial statements, who is going to use them? Who is going to use them? So the users of the financial statement. Who are the users? Sir, management themselves, the shareholders, the employees, outside people like the creditors, our customers, the bankers, the government, the research scholars, even the prospective investors. All these may use the financial statement. Fine. Okay, sir, we have understood. Yes, there is financial statement and there are users of financial statement. But what next? Why did I even take up this concept? Okay, please understand now. There is a problem. There is a problem now. Okay, what is the problem, sir? What are you talking about? There is a big problem, guys. You have to be very attentive now. Okay, now Let's take the first case of the problem. We have XYZ Limited. Okay, we have the shareholders of XYZ Limited, and we have the management of XYZ Limited. Let's say the directors of XYZ Limited. What did I tell you? What did I tell you guys? I told you that who prepares the financial statements? I told you it is the management of the entity who prepares the financial statements, right? Okay. Now, in this case, you all know the shareholders must have put in their money in XYZ Limited. They must have invested in XYZ Limited. Yes. All right. But who is running the company? The company is being run by the management, of course. All right. Now, I told you who is going to make the financial statement. Sir, the financial statements would be made by the management only. They are going to make the financial statements, right? Okay. Now, once they make the financial statements, of course, the financial statements will be given to the shareholders. Okay. Now, I have not discussed the problem yet. I'm just discussing how things happen, right? The reality. So management makes the financial statements, and then the shareholders would like to see the financial statements, right? Whether the company has made good profits, whether they'll be getting dividend or not. However, my simple concern here is, as a shareholder, will I be able to trust? Will I be able to place reliance on the financial statements that is, made by the management themselves? Management was using the money of shareholders and they were running the business. What if they have taken several decisions which is only going to benefit them personally and not the shareholders? And now they are only making the financial statements. So, as a shareholder, how will I be able to trust this financial statement? What if the management has taken a lot of remuneration by themselves for themselves, okay, and a very little profit or amount is left for dividend to be distributed to shareholders? This may happen. What if management is trying to hide things? What if the management is trying to fool the shareholders by telling them, no, no, our sales are going up, sales are going up, but in actual the sales are not going up? This might happen, right? So the question arises, the company is run by management and they only prepare and present the financial statements. So they might not be totally, fair in preparing the financial statements. And how would the shareholders trust this financial statement which is made by the management themselves? Okay, now, all right. Again, few more, problems let me discuss. Okay, so we discuss about the problem which a shareholder might face. How will he trust the financial statements which is made by the management of the company who's running the company? Okay, now let me give you more example. Let us discuss more problems rather. Okay, so I even told you that, okay, the lenders, the bankers will also use the financial statements, right? Okay, now let's say, I'll take the example here of my friend Chintamani. Chintamani Kumar, CK. Okay. Now, Chintamani Kumar goes to a bank, HDFC Bank. HDFC Bank. Okay. He goes with great pomp and style. Okay. Wearing a black suit with black glasses. And, okay, there are few more people with him. And, imagine the scene, when, you know, a big shot, in a big car, he comes down, and then in the background the scam 92 music is going on, etc. Imagine that scenario. Okay, now everyone would be like, hey, who's this big shot, who is this big shot? Okay, and Chintamani Kumar, with a lot of confidence, straight away enters into the HDFC branch manager's cabin. Okay, now even manager thinks, oh, somebody of some person of high profile has come today. God has blessed me. Okay, now HDFC manager is now talking to Chintamani. I am, let's say, the HDFC manager, and you are Chintamani Kumar. Okay, Chintamani Kumar tells the manager, sir, I need a loan. I need a loan. Of course, managers, I will ask, how much loan do you need? Sir, I need a loan of at least 10 crore rupees. Does your bank have that much money? I'm like, what are you saying, Chintamani Kumar? I am a bank. Of course, we have 10 crore rupees. Okay. So, yes, sir, we can give you a loan of 10 crore rupees. Okay. But as a manager, will I give 10 crore rupee loan to Chintamani Kumar just by his look and appearance? Because he came down in a big car and then wearing a black suit, and he has some bodyguards also, and Scam 92 music is going in the background. So, will I give him, as a manager, 10 crore rupees because of his appearance? No. So I asked Chintamani Kumar, Sir, we would be happy to give you a loan of 10 crore rupees, provided you give us certain documents. Chintamani Kumar was like, what documents you need, sir? Sir, we would be needing your financials. We would be needing the copy of your income tax returns. Why do you need it? Why do you even need it? Sir, we need it to assess whether you have the repaying capability. I know, sir, you have it, but we just have to, it's a formality. We have to see the financials. Okay. Then Chintamani Kumar is smart. Chintamani Kumar tells the manager, okay, in order for you to give me a 10 crore rupee loan, what all things you need in my financial statements? How much should be my turnover? How much should be my profit? So he takes all the inputs from the HDFC bank manager, and he says, tomorrow I'll come with all the financials. So the bank manager was also happy. Okay, done. Next day again, Chintamani Kumar goes to the manager with all the documents. Okay, now Chintamani Kumar himself has made all the financial statements as per the requirements of the bank. He has made the financial statements. Whatever manager had asked him to give, he has prepared and he has brought it. But now my simple question to all of you is, who needed the loan? Sir, Chintamani Kumar. Who prepared the financial statements? Sir, Chintamani Kumar. So do you think just to get the loan of 10 crore rupees, he might have made certain manipulations also in the financial statement? He would want the bank to know probably that he is a strong person. I mean, his financials is very strong and he has a repaying capability, and so that is why bank would also think of giving him the loan. But the HDFC branch manager is also smart. HDFC branch manager will say, Chintamani Kumar, I appreciate that you have made the financial statements, but how am I going to trust it? Do you think the HDFC manager is going to trust the financials given by Chintamani Kumar himself? No. So we have two big problems, guys. Shareholders also were facing a problem, that how will they place reliance on the financial statements which has been made by the management themselves. Here, the HDFC bank manager was facing an issue. How would he place reliance? How would he trust the financial statements which Chintamani Kumar has made himself? He needs the loan and he himself has made the financial statements. How would the manager rely on the financial statements? So there is a big problem now. And to resolve this issue, guys, everyone thought what should be done now, what in the entire world, this problem was being faced by everyone, not just these two cases, guys. Everyone in this world was facing this problem, right? So then, because of this problem, some people might have thought, let's create one profession. What profession? Let's create a professional person who will be in a position to check whether the financial statements made by the management are proper or not, are correct or not. The financial statements made by the management are okay or not. Okay. And then once he says, yeah, the financial statements are okay, the shareholders will be able to believe him, because that professional is not related to management. He is an independent person, not related to either management, not related to the shareholders. So if some independent person has that capability to assess the financial statements, check whether management has made proper financial statements or not, then the shareholders would be able to place trust. And that is why the profession of this is how the profession of auditing came into existence, guys. Shareholders will never trust the financials which management have themselves made. But now what is going to happen, try and understand. I'm redrawing this. The financial this is the financial statement made by whom? The management. Okay. And these are the shareholders. Okay, now let's say manage. Okay, I'll put management here. So what is going to happen now? Management makes this financial statement, but then there will be one person who will be appointed. We'll be calling him it as auditor. What is he going to do? He is going to see whether the financial statements are okay or not. I'm using the word okay for the time being, okay, because I'm just discussing the concept of auditing in a very layman's terms for the time being. Okay, so this auditor will see whether the financial statements are okay or not, and he is going to tell the shareholders, yes, the financial statements are okay. Now what is going to happen if this is the case? Shareholders will be able to place more trust in these financial statements. Why? Because it was checked by some person who is independent. When I say independent, that simply means this person was not related to the management, this person is not related to the shareholders also. So he will not take any partial decisions, he will give a independent opinion that okay, the financial statements are okay. And this is what the work of auditor is. Okay, here also in the second case also, when Chintamani Kumar gave financial statements to HDFC Bank's manager, HDFC Bank's manager was like, sir, we need to have audited financial statements. Chintamani Kumar was like, what do you mean by audited financial statements? Sir, we have to have somebody else who basically verifies that your financial statements are okay. And if we get that verified financial statements, basically, we shall be able to grant you the loan. So again, here also a need arises that the bank will also not accept financial statements which is made by Chintamani Kumar, but the bank is going to accept audited financial statements. When I say audited financial statements, it simply means the financial statements made by Chintamani Kumar will now be checked by a person who is called as auditor. Okay, he will check it, and once he puts his signature on it that okay, the financial statements are okay, this is going to increase the credibility of the financial information, and people will be able to trust this financial information now. This is the power of our sign, guys. Okay, this is the reason why you all are into the chartered accountancy course. The power of our signature. Once we put our signature on the financial statements, it increases the credibility of the financial statements. People are able to place trust on the financial statements. Oh, this has been audited by a chartered accountant, it must be okay. And the banks also accept audited financial statements, right? So I hope, I have told you the reason. I just, with the concept of financial statement and with the concept of discussing the different users, my intention was to make you understand that the users will not be able to place reliance on the financial statements made by the management. Hence, the auditors, when they check the financial statements and when they put the signature on the financial statements, it increases the credibility of the financial statement. Okay, and when the credibility of the financial statement increases, people will be able to rely on those financial statements, people will be able to trust those financial statements. So this is the need of auditing. This is the reason I just gave you the example to illustrate the demand for the profession of auditing. Okay, all right, so we'll discuss a lot more about it, but yeah, for the time being, guys, I have just one thing to discuss. Okay, yes, I have a note to discuss. Check this. I have mentioned here financial statements prepared by management. You all know that financial statements are prepared by management, right? So financial statements prepared by management and transmitted to outsiders without being audited by independent accountants or auditors leave a credibility gap. Leave a credibility gap. People will not be able to place trust on the financial information. So the contribution of independent auditor is to provide credibility. The another word is assurance. So what happens is, if this is the financial statement made by the management and I happen to be the auditor, I will go through the financial statements, I'll check it, and then once everything is okay, I'll put my signature here. Okay, and once this signature is put on the financial statements, once I give my report also on these financial statements, the value, the credibility of these financial statements increases. Okay, so basically what I'm trying to tell you is, it will increase the confidence of the users, of all the users, okay, in these financial statements. So there is a word here, credibility. In this usage means information can be believed, that is it can be relied upon by the users of financial statements. So guys, please understand, when management makes the financial statement and when auditor checks and he puts his signature on the financial statements, what happens? The financial statements, basically it increases the credibility of financial statements, and ultimately it gives assurance. It gives assurance to whom? To users of financial statement. It gives an assurance that the information in the financial statements is correct. It is okay. All right. So this is the power of our signature, guys. And this is the reason I told you this earlier also, that why all of you have enrolled in this wonderful course. Okay. All right. So can I put it in this way, guys, that once I do the audit of financial statements, okay, so I say that once I audit, assurance is the outcome of auditing. When I audit, when I put my signature on the financial statements, it gives assurance, it gives confidence to whom? To the users of the financial statements, that the financial statements are okay, that the information contained in the financial statements are not manipulated, it is okay. So what I'm trying to tell you is, can I put it in this way, that assurance is an outcome of audit? The answer is yes. Assurance is an outcome of audit. Okay. And let me be very honest and tell you guys things, that chartered accountants, we chartered accountants are hired to do this work of auditing, right? And we have the power, our signature has the power. Once you become a chartered accountant, your signature will have that power, that yes, once you put your signature on the financial statement, it will increase the value of the information, it will increase the credibility of that information, it would give assurance to the users of the financial statement. And that is the reason, guys, why I discuss the word users of financial statement, because once I do the audit, the users of financial statement will get something called as assurance means credibility. Okay, they will be able to place trust on the financial statements. Fine. All right. Yes. So yeah, I have just given you an overview with respect to why the profession of auditing is required. We have discussed regarding the demand for the subject of auditing. Okay. All right. Now, few more things. See, in the first few lectures, we are only going to discuss the fundamentals. Okay. And let me tell you very honestly, your concepts again will be extremely clear when we come towards the end of the fundamentals chapter, and you'll start loving and enjoying this subject. That's my guarantee, guys. Okay. All right. Now, few more terms we have to study. I have not taught you yet the definition of auditing. I have just given you a very superficial, illustration, rather, I should say, to make you understand or give you an overview of the concept of auditing the financial statement. Okay. All right. Now, yes, let us understand few more terminologies. Okay. Now, the next terminology that we are going to come across so many number of times in the subject of auditing is something called as financial reporting framework. In short, I would be referring to this as FRF, financial reporting framework. What does this mean? Okay, guys, I told you this. Again, you have to answer. Who is responsible for preparation and presentation of financial statements? Sir, it is the management of the entity. Management will prepare the financial statements. I gave you the example of Chintamani Kumar. Chintamani Kumar himself, he was a proprietor, right? He himself was running the business. So who made the financials? He himself will make the financials. He is the management. He is the owner and he is the management. But in case of company, the ownership and the management, the owners and the managers are different. Owners are the shareholders. Managers are different. The directors, the board of directors. In case of proprietorship firm, Chintamani Kumar is the owner. Chintamani Kumar himself is the manager. He takes all the decisions, right? Now, what I'm trying to tell you is, guys, when the management of the entity, I'm using the word entity, okay? Any entity, it can be any entity. When the management of the entity makes the financial statements, okay? My simple question is, can they make financial statements as per their will, as per their own choice, as per their, I can say, as per what they like? Let's say it is a company. Let's say we are talk about a company XYZ Limited, and the management of the company is responsible for preparing the financial statements, right? The company, the management wants to make a T form. They want to make a T form financial statements for the company. Can they do so? No, sir, what are you saying? Financial statements of a company cannot be in T form. It has to be as per what? As per the format given in the Companies Act. It is given in Schedule 3 of the Companies Act. Yes or no? Yes. So, company cannot make a financials in T form. Sir, can partnership firm make financials in T form? Yes, it is up to them, because Partnership Act doesn't specify any format or schedule. So in partnership firm, if they want, they can go for a T format also. If they want, they can make it in other formats also. Fine. So what I'm trying to tell you is, number one thing you have to understand, it is the management who is responsible for preparing the financial statements. Yes, but you have to understand that they cannot make financial statements based on their likings, or based on their choice or will. They have to follow certain set of rules, certain regulations when they are making the financial statements. They have to follow, in very layman's language, let me tell you, that they have to follow certain rules when they are making the financial statements, right? So these rules will be called as financial reporting framework. So what is it? It says a financial reporting framework is nothing but set of rules and regulations that are to be followed for preparation and presentation of financial statements. So a very good example can be what? Example, let's say if it is a company, the applicable financial reporting framework is Schedule 3, the accounting standards, Schedule 3 AS. In some companies, they have to follow Ind AS also. So all these are financial reporting framework. Schedule 3, AS, Ind AS, all these are financial reporting framework. Okay. I'll give you a few more examples. You must have heard about, let's say, US GAAP, or you must have heard about IFRS. All these are what? All these are frameworks. All these are FRF, financial reporting framework, using which the management of that entity is going to prepare the financial statements. Okay. So in short, guys, we are going to take this FRF word so many times in future in this subject, so don't worry about it. But at the moment, my objective, my intention is to just to give you a idea about these words, so that you don't, and you understand them conceptually. Okay, we are going to take it up again, don't worry. So number one, again, who will be using the FRF? Sir, management makes the financial statement. Yes. So management will use FRF while they are preparing the financial statements. They will see whether the financial statements are in compliance with Schedule 3, are in compliance with, let's say, Ind AS, if it is applicable to their company. If it is a foreign company, maybe they'll see, if IFRS is applicable on them, the company's management will follow IFRS and accordingly make the financial statements, right? So repeating it for the last time, what is financial reporting framework, guys? Financial reporting framework is nothing but set of rules and regulations. Who will be following it? It will be followed by the management when they are preparing and presenting the financial statements. Done. Okay, all right. Now, so we have covered three things: what is financial statement, users of financial statement, and financial reporting framework also. All right, now the time has come. Probably let us now understand the formal definition of the word auditing. Okay, and I would want your full attention now for the next few minutes, guys. Okay, all right. So I started the session by discussing the generic meaning of the word auditing, right? I told you what is auditing, and we all were like, sir, to check, to examine, to verify something. This is the generic meaning of the word auditing, right? But let us now understand the technical, I mean, not technical, don't get scared, the good meaning, or let's say the good definition of auditing. And this definition, we'll try and keep it in mind also, though we are going to refer it to this a lot of times in the upcoming chapters as well. All right, so what is auditing? Let us start now. Audit is independent examination of financial information of any entity, whether profit oriented or not, irrespective of its size or legal form. When such an examination is conducted with a view to expressing an opinion thereon. Such a huge definition. Yes, sir, it is. I'll read it for three more times. Okay, what is audit? Audit is independent examination. Let me read it for one more time, guys, and then we'll break it. Okay, break it into point by point, and I'll try to explain you each and everything. Okay, so what is audit? Again, let me read it. Audit is independent examination of financial information of any entity. This entity can be a big entity, a small entity, whether profit oriented or not, irrespective of its size or legal form. When such an examination is conducted with a view to expressing an opinion thereon. Okay, guys, so I have read it almost, I think, twice, and let me do it for last time. Okay, what is auditing? Auditing is independent examination of financial information of any entity, whether this entity is profit oriented or not, irrespective of its size or legal form. And when, why is this audit done? It is done when such an examination is conducted with a view to expressing an opinion thereon, expressing an opinion. Okay, let's now break it down. Let's understand point by point. Okay, so audit is number one, independent examination. Let's understand still this part. Audit is independent examination. Okay, now let's emphasize on the word independent. Okay, I'll give you a very simple examples to discuss all this. Okay, let's say there is a company XYZ private limited. Okay, my father and my father happens to be a director here. That means he is in management. Okay, my father happens to be the director in this company XYZ private limited. Okay, now my father is like, hey, we have paid so much for your education. Now that you are a chartered accountant, okay, why don't you only audit our company XYZ private limited? Why should I pay some other auditor's audit fees? Now that you are a chartered accountant, you are an auditor, you know, why should I be paying it to some other chartered accountant? Now, my simple question to all of you is, if I become the auditor of this company wherein my father happens to be a director, do you think, guys, will I be able to, you know, say, or let's say, will I be able to give this opinion that the financials of XYZ private limited is okay? Even if, let's say, what if my father might have manipulated something? What if there is some ghapla in the financial statements? Now that is my father, I'll not even point it out. Oh, there is some ghapla, there is some issue in the financial statement. Yes or no? So this is going to defeat the very purpose of auditing. This is not auditing in real sense. Hence, very important word for you to understand is auditor. The person who is doing the audit has to be independent. When I say independent, in this example, in context to this example, I wish to convey that I should not be related to the management of the company, because if I am related, I would become biased. I would never express something like this. Oh no, the financial statements are not okay in a company wherein my father is a director. I would always probably take the side of my father, right? It is human nature. So that is why in this case, ideally I should not become the auditor of the company, because I won't be able to act independently. See, independence is a very important concept. Okay, this example which I took perhaps was with respect to the financial statements. Okay, let me give you more simpler examples. Imagine a cricket match going on, okay, between India and Pakistan. Okay, and let's say India is not playing that well, and then the umpire in that match also happens to be from Pakistan, and then there is an LBW appeal and he gives out. The first thing probably that will come to your mind is, hey, this umpire, no, he's not fair, he's, partial, he's being partial to the team of Pakistan. Why? Because he himself is from Pakistan. This might come in your minds, yes. And probably that person might not be able to act very independently there. So maybe, that is why probably ICC, right, they want that any in international matches, the umpire would be independent. That means they would not be from, the countries which are playing the matches. Okay, so then probably, the umpires can be said, yeah, they are totally independent. Again, let me take one example. Okay, I'm a football coach. Okay, sorry, I'm a football coach of one team. Okay, let's say team A. I have been the football coach, okay, since last 4 5 years. Now my team A is playing against team B, and then let's say this is coach. Now in this match, this coach is only made the referee. So of course, do you think this coach will be able to act, impartially? No, he would always favor his team because he has been giving them coaching for, let's say, last 4 5 years. So in this case, the coach is not independent, right? So in likewise, guys, when somebody is doing the audit, okay, if I take you back to this case, the shareholders and the management, if I take you to this case of HDFC Bank and Chintamani Kumar. Okay, when will the credibility of this financial statements increase? When it has been signed by an independent auditor. Independent simply means the auditor should not be related to either Chintamani or to the bank also, because if it is, because if auditor is related to the bank also, they would, of course, they might become partial and comment on things in favor of the bank. So in simple words, see, I'm just trying to teach you again in very layman's terms for the timing, that the person who is doing the audit has to be independent. And when I say the word independent, it simply means he has to be impartial. He need not be biased towards anything. Then only audit will be, we can call this to be an audit. Okay, so number one, the very first thing which the definition of auditing teaches us is auditing has to be an independent examination. Independent, I hope you are clear on the word independent. Independent simply means that I shall not be biased, I shall not be influenced by somebody else. If my father is a director in a company and I find some faults in the company when I'm auditing, he will be like, hey son, we have given so much of money for your education and now you are only pointing out errors in our financial statement, something like this. So I might get influenced. So if I get influenced, then I am not independent, and hence I should not be doing such audits, right? So number one thing in the very definition that you have to follow, you have to understand about this wonderful subject of auditing is that it has to be done by an independent person. The examination has to be very much independent. Okay, all right, we'll talk a lot about independence in the upcoming lectures, but again, I'm repeating this that it's just an overview. Okay, in the chapter of fundamentals, I'll be giving you an overview of the entire course so that you know that okay, this is how things happen and this is what we have to study. All right, okay, so yes, auditing is what? Independent examination. So this is what I have taught you till now. Audit is independent examination of what? Of financial information. Sir, they have mentioned the word financial information and not financial statements. What does it mean? Please understand. As an auditor, guys, when I check the financial statement, when I check the financial statement of a company, let's take this case only example. So let's say we have XYZ Private Limited, and I have to check the financial statements made by the management of XYZ Private Limited. So guys, when I check the financial statements of XYZ Private Limited, let's say I'm checking the P&L and there is an expense. There is an advertisement expense to the tune of 2 lakh rupees. How would I verify it? How would I check it? They have just given me the financial statements, right? So just remember this, guys, that when you are auditing the financial statements, you just don't look at the financial statements, but you would be checking all the underlying documents and data through which the financials were made. What do you mean, sir? So guys, I would be checking not just I mean, when I say I am checking the financial statements, it means I am checking all the underlying documents and the data which was used to prepare the financial statement. For example, let's say a AC has been purchased. An AC has been purchased by a company, by my company. Okay, now how will my company make entries in the financial statement? Through which document? Which is the first document they'll see when they make entry in the financial state, in the accounting system or tally software, whatever it is? What is the first document they are going to see? Maybe the invoice of the AC, right? So the invoice, I'll call it as source document. Invoice will be my source document. Why source? Because through this document only data will go into the software, accounting software or system. So through source document, then the journals are passed. From the journal, the data will go to the ledgers. From the ledger, it will go to the trial balance and then some adjustments to the trial balance. And then finally, the financial statements will be made. Yes. So what I'm trying to tell you is when you check these financial statements, whether they are properly made or not, whether everything is okay in the financial statements or not, you are also going to check the underlying documents. And when I say the underlying documents or underlying information, it can be the source document, it can be the journal, it can be the ledgers, it can be the trial balances. You'll check all these, right? That is why in the definition, if you see the definition of auditing, again it says audit is independent examination of financial information. They have written. This financial information means everything. It will include source documents, it will include vouchers, it will include invoices, it will include journal, it would include ledgers, trial balance, etc. Right? So that is why they have used the word financial information. All right. So we have completed two parts with respect to the definition of audit. What are the things we have covered? We have covered that audit is independent examination, okay, of what? Of financial information, okay. Independent examination of financial information of which entity? It can be, guys, any entity. It can be any entity. Auditing can be done for any entity, okay, whether this entity is profit oriented or not, whether their aim is not to earn profits. I mean, let's say it may be an NGO, it may be an NPO, okay. So it can be profit oriented or not, irrespective of its size. It can be a big company, it can be a very small entity also. It can be of any legal form. When I say it can be of any legal form, that means entity can be a company, entity can be an LLP, entity can be a partnership firm, entity can be a proprietorship firm, entity can be an individual, entity can be an HUF, entity can be a trust, it can be a society. You think of any entity and we can do the audit, okay. So what is it that we have covered in this part? Again, I will be repeating the definition a lot of times, so please bear with me, and then probably towards the end we are going to revise it a couple of more times so that it gets inside your this thing, okay. All right. So audit is what? Audit is independent examination of financial information of any entity. This entity can be profit oriented or not, and irrespective of its legal size, irrespective of its size or legal form. When I say legal form, that means it can be any entity. It can be company, HUF, it can be trust, it can be society, individual, it can be partnership firm, it can be LLP. Okay. All right. So I think till this part the definition is clear. Okay. Let me read it for the last time, okay, for my understanding. So audit is what? Independent examination of financial information of any entity, whether profit oriented or not, and irrespective of its size or legal form, okay. Now the main question: why is it done? Why? So when such an examination, see, we started the definition is with what? An audit is independent examination, right? So this examination, when such an examination is conducted with a view to express an opinion thereon. Thereon means what? Thereon means the financial statements, the financial information. When, why is auditing done? Auditing is done, the examination is done to express an opinion on the financial statements. So what is the ultimate objective of doing the audit, guys? The auditor is going to express opinion on the financial statement. What kind of opinion? Up until now, I was saying you this, right? Whether the financial statement is okay, whether the financial statements are correct, all these words I was using just to give you a fair idea. But now we are going to dive into the actual things, okay, slowly and gradually. So again, let me repeat the definition again. Audit is independent examination of financial information of any entity, whether profit oriented or not, irrespective of its size or legal form. When such an examination is conducted with a view to express an opinion thereon. Thereon means the financial statement. Now we have to understand a very important term, guys, that when I do the audit, I have, the ultimate objective is to express an opinion. So you have to understand the importance of this word now. Let us understand the significance of the word opinion. So please understand, when I do the audit, I will be expressing an opinion on the financial statements. What opinion? I'll come to that later on, but let's understand the significance of the word opinion now. Okay, guys. Okay, let me just. Okay, so let me just discuss the concept of opinion with you. Okay, guys, and with respect to opinion, I am also going to take one more word which I will be calling it as certificate. Okay, in order to make you understand the definition of auditing properly, I'm just taking up all these examples. Okay, I'll be taking up. So what is opinion? Opinion, guys, means, one's point of view towards any given fact. One's point of view towards any given fact. Okay. And there is one more word. Certificate means establishing a given fact. Okay. Now, what does it practically mean? Okay, I'll have to take few examples so that everything is very, very clear in your heads. Okay, guys, let's say when you watch a movie, when you go to a movie theater, and let's say when the movie is about to start, there is one certificate which comes. I believe all of you must have seen that. Okay, and in that certificate from the censor board, okay, sometimes U is written, sometimes U/A is written, sometimes only A will be written. Okay, so that certificate which comes at the start, at the before the movie starts, is basically a certificate who can watch the movie, whether it is a universal movie, whether it can be watched by persons who are 13 plus. If it is an adult movie, it can be watched by persons who are 18 plus, likewise. Okay, so what I'm trying to tell you is that is a certificate. That is a certificate. If the censor board tells that okay, this is a movie to be watched by adults only, then they don't have any second thoughts or doubts about it. They have expressed, they have given a certificate, they know it, that this is an adult movie. There is no doubt about it, there is no second thought about it. Okay, but when I talk about the word opinion, okay, what is opinion? Let us understand. Now, when your friend watches the movie and he gives you a feedback, he gives you a review. Hey, I loved the movie. Yeah, it was great. I mean, Ranbir Kapoor, he acted, he was damn awesome in that movie. Okay. So he has given you a opinion. He has given you his feedback. Okay. Uh, Opinion would vary from person to person. Opinion would vary from person to person. One friend of mine would say that, yeah, this new movie is super amazing. The other might be like, don't waste your single rupee if by watching this movie. Forget about the rupee, don't waste your time. It's better if you sleep. This might be the review of some other person. I mean, my other friend who watched the same movie, right? So, what I'm trying to tell you is opinion is one's point of view. I mean, people will have two of my friends went to the movie together, but both of them have different opinions about the movie. This might happen, right? So, opinion is basically one's point of view towards a given fact. It's a point of view. However, certificate doesn't mean point of view. It is establishing a given fact. So if it is an adult movie, any person, I mean, from the censor board of India will say, yeah, it is a adult movie, or whether it can be watched by anyone, universal. So everyone will say universal. Again, very layman's example again, guys. You got passing certificate of 10th standard, 12th standard, right? Maybe from CBSE, maybe from your local board, right? So you got a passing certificate. Now, is the CBSE board sure, 100% sure that you passed, and then only they gave you a certificate? Yes or no? Yes, they are sure. There's no second thought about it that you have not passed. They are pretty sure, they are 100% sure that you passed, and accordingly they gave you the certificate. So guys, when somebody gives you a certificate, that means there is no second thought about it. There cannot be second opinion about it. You have passed, and they are establishing a fact. But when I talk about opinion, every person might have a different opinion. Different people might have different opinion. So there is a difference between the two words, opinion and certificate. If I give you a certificate, that means whatever I'm writing is 100% correct. Is 100% correct. It is, there is no second thought about it. If I give you a certificate, it would mean that. However, you have to be very careful. When I'm auditing the financial statements, guys, I don't give certificate. I express opinion. I express opinion. When I audit your financial statements, I will not be giving a certificate that everything in the financial statement is correct. No, this will never happen. Why? I'll tell you later on. But yeah, please understand, in this subject of auditing, I mean, when we do the audit of financial statements, what we give is opinion on the financial statements. Okay, why opinion? Because let me be very frank and tell you this. I am a chartered accountant. I might feel that your financial statements are okay. Some other chartered accountant, when he does the audit, he might feel that the financial statements are not okay. Why? There are certain reasons. The subject of auditing has some limitations, which we are going to cover up later. And because of this, we never issue a certificate. When we do the audit, guys, okay, now, I'll give you one simple example. When I do the audit, let's say I'm doing the audit of a very big company. I'm doing the audit of Airtel. Airtel. Imagine the number of transactions the company must be having throughout the year. Throughout the year, so many subscribers they have of prepaid connection, postpaid connection, internet connection, DTH connection. So many number of transactions they must be having. If I am the auditor of Airtel Limited, okay, I would not be able to check all the transactions because I have to complete the audit and submit the audit report, which needs to be sent to the shareholders before the AGM, right? Annual general meeting. So my time, my time, I have limited time to do the audit, and hence I would not be able to check 100% of the transactions of Airtel Limited. Hence I would never be in a position to give certificate. I will never be able to tell that I certify beyond doubt that the financial statements of Airtel is okay. I'll never be able to give a certificate. So always remember, guys, that when we do an audit, we express our opinion. And what is meant by opinion? Opinion is somebody's, one's point of view. Certificate, on the other hand, means what? Establishing a fact, confirming, saying something that beyond doubt, establishing with 100% accuracy. If you have that level of confidence, then probably we can give a certificate. But in auditing, we never give a certificate. We always express our opinion. Hence we have this word express an opinion thereon. Okay, anyway, so what is opinion? Opinion means one's point of view towards any given fact, and certificate means establishing a given fact. Establishing a given fact. Okay, auditor, now please read this word very carefully. Auditor usually issues opinion. He issues opinion and not certificate on the financial health or on the financial statements of the organization. So he will issue opinion. So when you do the audit, guys, always remember we are going to express opinion. We don't give a certificate that everything 100% of the things are true or correct. We never give certificate. We express our opinion. I hope you are clear on the difference between the word opinion and certificate. Okay, now guys, again, when you were given the passing, certificate, when you were giving the certificate of 10th class, 12th class, CBSE board was pretty confident that you have passed. They did not have second thoughts. Hey, in my opinion, this guy must have passed. No, no, no. They are dead sure about this, that you have passed, and hence they have given you a certificate, right? So what CBSE board issues is a certificate. It is not their opinion. Hey, looking at this boy, it looks like he must have passed. This is not what they write or express, right? They are 100% sure that you have passed, and accordingly they have given you the certificate. Likewise, the censor board, before, they watch the film and they're 100% sure whether it is a universal movie or can be watched by kids or only adults. They are 100% sure about it, and then they give the certificate. There is no second thought about it. But guys, when your friends watch the movie, when you watch the movie, you may like it, your friend might not like it. So then it's an opinion. We are now expressing our opinion. Opinion will vary from person to person. Okay, all right. Okay, now I'm still not done with the definition of auditing. I'm reading now the definition. I mean, all the points together. Let's read the definition now in totality. I mean, one complete definition. Okay, so what is audit? Audit is independent examination of financial information of any entity, whether profit oriented or not, irrespective of its size or legal form. When such an examination is done with a view to expressing opinion thereon. Thereon means on the financial statement, on the financial information that we have checked. Fine. Okay. Now, sir, you have told us so much about opinion, that the auditor is going to give opinion on the financial statement. Sir, what kind of opinion? Will the auditor say that the financial statements are super awesome? Will the auditor say that your financial statements are looking like a wow? No, no, no. He's not going to give all this kind of opinion, right? Of course we have to be professional. So auditor is not going to use such words that your financial statements are okay, that your financial statements are super awesome, or your financial statements are just looking like a wow, like that reel that we had. Okay, anyways, so what kind of opinion is the auditor going to give? Okay, so auditor, please understand, auditors makes a report to the person appointing him after due examination of the accounting records and financial statements in the form of an opinion. So auditor makes a report. He is going to now give his opinion in the form of a report. Okay, now the opinion that he is called upon to express is whether the financial statements reflect true and fair view or not. So whether the financial statements are giving true and fair view or not. So what kind of opinion are we supposed to give? We have to give an opinion whether the financial statements that I have checked as an auditor, as an independent auditor, whether that financial statement is giving true and fair view or not. Sir, what is this true and fair view now? This is what we have to study, guys. So see, I'm going step by step. In the definition of auditing, we came across the word opinion, right? So we discuss opinion here. Now in the definition of opinion, we have come across the word true and fair view here. So we are going to discuss true and fair view also. Okay, now but one small thing, guys. So I have been telling you this, that auditor is going to express his opinion, right? Is he going to express opinion verbally? In my opinion, financial statements are okay. No. See, it's a formal profession, right? So when we give our opinion, we have to give it in the form of writing. We'll give our opinion in a written report. That report will be called as audit report. And you are going to put your awesome signature on that report also. Okay. So because of that report, the financial statements credibility will increase. Everyone would be seeing your report, your signature, everything, and then feel that the financial statements are okay, right? So is the auditor going to express opinion verbally? The answer is no. He is going to express his opinion in a written format, and the place where the opinion is expressed, the document where the opinion is expressed, it is called as audit report. So the report in which auditor expresses his opinion on the financial statement is known as audit report. So when we do the audit, when we check the financial statements, we are going to express our opinion in the form of an audit report. Okay, we are going to express our opinion in the audit report. Anyways, so let me come back to the topic, guys. What opinion is the auditor going to give? The auditor is going to give an opinion whether the financial statements give true and fair view or not. So now a very big question that should pop up in your minds is basically what is true and fair view, right? So we are going to discuss about what is true and fair view. But before I move ahead with the concept of what will amount to true and fair view, I would just want to just go through the things that we have covered so far, guys. Okay, we have not yet started the subject of audit. It's just the fundamentals that I'm teaching you, because ideally I would be starting auditing with chapter number 1, but this is chapter number 0, guys. Okay, so just basic concepts. So I told you what is financial statement, then we learned about who are the users of financial statement, then I told you about the problem that the users face. They are not able to place trust on the financial statements prepared by the management. So that is why we have one person, independent auditor. He checks everything and then he reports to the users. Okay, and then they are able to place trust on the financial statement. So this is what we have covered up until now. Okay, now let us understand, guys, what is the meaning of the word true and fair view. All right, now be attentive. Okay, so I am reading this line again. The opinion that the auditor is called upon to express is whether the financial statements are giving true and fair view or not. So this is the opinion that the auditors are going to express. So what is meant by true and fair? Let us understand. True, in very basic layman's terms, if I say, true means that the financial statements are truly prepared, are truthfully prepared, and fair means the presentation is fair. Do you mean by this, sir? Okay, all right, so I'll give you a very simple example. Let's say the company again purchased this air conditioner. Company has purchased this air conditioner. Okay, guys, the air conditioner's price was 50,000 rupees. Okay, so ideally they should make entries in the books, right? They have purchased some fixed assets, okay, and then accordingly the entries must be made, right? So let's say rather than making entries for 50,000 rupees, the company made an entry of 5 lakh rupees, okay, that they have purchased AC worth rupees 5 lakh, and their intention was to claim more depreciation, etc. Okay, now my simple question to all of you is, has the financial statements been truthfully prepared? The answer is no, because the amount should have been 50,000. It's not truthfully prepared, okay? It's not factually correct. True word means that the financial statements are factually correct. This is not factually correct. Hence, I will not say that the financial statements are true here. However, let's say, guys, okay, let me put it one more example. The cost of the AC was 50,000 rupees, and the management has made correct amount entry in the books. Let's say they have recorded this as 50,000 only, right? But rather than capitalizing the amount, of course, this is a fixed asset, right? Rather than capitalizing it, they have shown it as a part of the revenue P&L. Amount is correct here. So it has been truthfully recorded. The amount has been truthfully recorded, but the presentation is not proper. What should have actually been capitalized, they have now charged to the revenue account. So presentation is not proper. That means amount is truthfully recorded, but it is not fairly presented. So again, the financial statements here will not give a true and fair view, right? So what is true and what is fair? Let's understand. Fair information, fair implies that the financial statements, just remember the word, presentation. Fair word is basically with respect to presentation, that it has to be presented properly. It has to be presented, properly. All right. So what is true and fair, guys? True means that the financial statements are factually correct. Okay, and fair is with respect to the presentation part. We are going to learn more about this term later on, but for the timing, you have to understand that as an auditor, I have to see whether the financial statements are true and fair. I have to see whether it is factually correct and the presentation is also proper. Now, how will I get to know whether the presentation is proper or not? How will I get to know? Sir, please understand, if let's say it is a company, if I am auditing a company XYZ Private Limited, how should the management of the company, how should they have made the financial statements? You all know that the management of the company makes the financial statement, right? So how should have they made the financial statements? Sir, they are a company, so they should have followed schedule 3 while making the financials. They should have followed all the applicable AS, or let's say Ind AS, while making the financial statements. Yes or no? It's a company, right? This is called as FRF. If you remember, here we learned financial reporting framework. This is called as what? FRF, financial reporting framework. Okay. So coming back to this, all right, so if I am the auditor of XYZ Private Limited, guys, okay, when can I say that the financial statement is giving true and fair view? I will be able to say that the financial statements are giving true and fair view only when it is made in accordance with the FRF. Only when the financial statements comply with the requirements of Schedule 3, comply with the requirements of accounting standards, then only I'll be able to say yes, that the financial statements are giving true and fair view. Okay, so let's understand this, guys. Yeah, we have a point. Yeah, see this point. True suggests that financial statements are factually correct and have been prepared according to the applicable reporting framework, applicable financial reporting framework. Because it is a company, what is the applicable financial reporting framework? Schedule 3 AS. So if the financials have been made by the management complying with the requirements of Schedule 3 AS, then we say that the financial statements is giving true and fair view. Okay, so one thing again, please be attentive. What did I teach you up until now? That when will the financial statements give true and fair view? Number one thing to keep in mind is financial statements will give true and fair view when it has been prepared in accordance with the financial reporting framework. Number one. Okay, we have one more line, very important line to cover. Okay, it says financial statements will give true and fair view if they are free from material misstatements. Again, a new word. Be attentive, guys. Please be attentive. What does this line say? Repeat it again with me. Financial statements will give true and fair view if they are free from material misstatement. Sir, up until now you are saying financial statements will give true and fair view when they are made in accordance with the applicable FRF. That is also correct. And here they are mentioning something else. It's not something else. I'll come to it. Don't worry. Here they have mentioned financial statements will give true and fair view if they are free from material misstatement. Now, to understand this line, again, we'll have to discuss two words, misstatements and then collectively material misstatements. We'll have to discuss these two words first. Okay. And then I'll come to the point. Don't worry, guys. Don't worry. I hope you all are with me. Okay. All right. So it's a super easy subject. Okay. And again, believe me guys, that the way I'm going to take you up throughout the journey of auditing, you would love this subject, you would fall in love with this subject, you would definitely like to attend, see the class, you would love to read it again at home, you'll be excited about appearing in the exams. And this is not what I am saying personally, but this is the feedback and the reviews which I keep on getting from my students. Okay. All right. So yes, coming down to this, financial statements will give true and fair view if they are free from material misstatement. So let us first understand the word misstatement. And mind you guys, this is super important word. Something probably in every page of your audit subject, you will get this word. Okay. So let us read about misstatement. Okay. Now, what is misstatement? In very layman's terms, it simply means mistake in the financial statement. What did I say? Mistake in the financial statement. So when an item or information, is wrongly stated in the financial statement, it is referred to as misstatement. When something is wrongly stated in the financial statement, it will be referred to as misstatement. Now, what does this mean? Okay, I'll give you a few examples. You tell me whether it is a misstatement or not. Okay. So management had bought air condition worth rupees 50,000. Okay. But in the books, they have, made entries with respect to only rupees 5,000. Is it a misstatement? The answer is yes. Answer is yes, because anything which is wrongly stated, in the financial statement will be referred to as what? Misstatement. So this is a misstatement. Let's say, guys, okay, they have recorded the entire 50,000 rupees only, but rather than capitalizing this amount, they have charged it to the P&L. The amount is correct, but do you think is the presentation proper here? Is the accounting treatment proper here? Rather than capitalizing, they are charging it to revenue. No, it is not proper. So again, is it a misstatement? Yes, it is a misstatement. Why? Because anything which is wrongly stated in the financial statement is a misstatement. When any item or information is wrongly stated in the financial statement, it would be called as misstatement. So writing the amount as correct, but if the presentation becomes wrong, if the classification becomes wrong, you are capitalizing, not capitalizing something which should have been capitalized, then again it's a misstatement. Okay. So what all examples did I give you? Number one, if you make entry of 5,000 instead of 50,000, is it a misstatement? Yes, it is a misstatement. If you have made the entries of correct amount, but then you did not classify or it properly, you did not do the accounting treatment properly, it's a misstatement. Okay, guys, few more points. Okay, you have to understand this, that let's say the company altogether, all of a sudden they bought this AC, it was super hot, they bought this AC, and somehow they have skipped, they have missed on passing entries with respect to this AC in their books. They have totally forget about 5,000, 50,000. They have not entered anything in the books with respect to this AC. They have outrightly omitted this transaction from the books. The payment was made, everything was done, but they have missed on making entries with respect to buying this AC in the books. Will this be a misstatement? The answer is yes. You have to understand, guys, omission of something which should have been there in the financial statements, omission of something would also amount to misstatement. Okay, so let me just summarize, guys. Okay, up until now regarding misstatements, what concept have I taught you? What did I teach you? I told, number one, that any item or information, if it is wrongly stated in the books, will amount to misstatement. So we were discussing about the AC. They put the wrong figures while making the accounting entries, then it's a misstatement. They have put the correct figures, but the accounting treatment is wrong, revenue versus capital, then it's a misstatement. They have completely omitted making entries of AC in the books, again it is a misstatement. Okay, few more examples, but before that, I would go with a technical definition of misstatement. This was a very layman's definition, that anything which is wrongly stated in the financial statements is referred to as a misstatement. But let us dive into the technical definition also. Technical only to say, it's not hard. Okay, so technically misstatement means any difference. Technically, misstatement includes any difference between what is required by FRF and what is included in or omitted from the misstatements. Please understand this. Please be attentive now. What is a misstatement? Misstatement includes any difference between what is required by FRF. I hope you all know what FRF means, the financial reporting framework. What is required by FRF and what management has reported, what management has stated in the financial statements. If there is any difference between the two, then it would lead to a misstatement. Sir, what are you saying? Nothing is getting inside our heads. Don't worry, guys. Let me give you one example and then we'll come back to the technical definition again. Okay, guys. All right. I'll give you one simple example. The company has inventory. The company has inventory. Okay. And the company has valued their inventory on the basis of LIFO method. On the basis of LIFO method. Fair enough. Okay. But now my simple question to all of you is it a misstatement? Is it a misstatement? They have valued it on the basis of LIFO. The amount and figure is all correct. The method of valuation for their inventory is LIFO. Is it a misstatement? Guys, it is going to be a misstatement. Why? Because this is not as per applicable FRF. It is not as per AS2. AS2 says that inventory can be either valued on FIFO basis or weighted average. Okay. But they have used what method of valuing inventory? LIFO. So this is not as per FRF. Hence, it is going to be a misstatement. It is going to be a misstatement. So technically, if you read the definition again, technically it simply means what is required by FRF and what management has done. If there is any difference between the two, it will be called as misstatement. So let's read the point. Technically, misstatement includes any difference between what is required by applicable FRF and what is included or omitted from the financial statements, I mean by the management. Okay, I'll give you a few more examples. Let's say, guys, probably I'm not very sure if you have knowledge of all the AS accounting standard. Let's say AS 18. AS 18 is related parties. Okay. And as per the requirement of AS 18, the management should disclose all related party transactions in the, let's say, notes to accounts. There is a format also. Okay. Now, management in the notes to accounts have not mentioned that particular detail. They did not give the details of related party transactions. Okay. P&L, balance sheet, everything is okay. But they have failed to disclose things which is required as per AS 18 in the notes to accounts. Will it amount to misstatement? The answer is yes. This will also, be a case of misstatement. Why? Read the definition again. Anything which is required as per AS or FRF and, which is not there in the financial statements given by the management. If there is a difference between the two, it will lead to misstatements. Okay, so what is it that I'm telling you about misstatement, guys? Again, let's read the point. When any item or information is wrongly stated in the financial statement, it is referred to as misstatement, number one. And technically, misstatement includes any difference between what is required by applicable FRF, any difference between what is required by applicable FRF and what is included in or omitted from the financial statements. What is included in or omitted? So in the example which I gave you with respect to AS 18, they had skipped, they had, they somehow did not disclose it, the notes to accounts, the related party transactions. So they have omitted something which is required as per AS 18. Hence, it is a case of what? Misstatement. Okay, guys, again, this is a financial statement given by management with respect to their company. Okay, and let's say This is something which should have been as per FRF. This is not a financial statement. Okay, let's say about inventory only. Management has given the financial statements, they have inventory, but the method of valuation is LIFO. But as per AS, what should be the method? Either FIFO weighted average. Is it a misstatement? Yes. So again, let me repeat it for the last time. If there is any difference between what is required as per FRF, financial reporting framework, what is FRF? Rules and regulations to make the financial statement. Okay, it can be Schedule 3, it can be AS, it can be Ind AS. For foreign companies, we have IFRS, US GAAP. All these are examples of FRF. So if there is any difference between what management has made and what is the requirement of FRF, then it is a case of misstatement. Done. Okay, so I hope you have understood the definition of misstatement. Okay, now guys, misstatement is a mistake. Right now, the very important point to understand is that this misstatement can either be, out of error, that okay, I had to make an entry of 50,000 for the AC. While I was inputting tuck 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 in the system, I made an entry of 5,000. I somehow missed 10. So misstatements can either happen because of errors, or it can be intentional also. Management of the company might try to intentionally do something, then it will be, called as fraud. So what is misstatement? Please understand it. How can misstatements arise? Misstatements arise either because of fraud or error. Okay, and let's read the two words quickly, not very important for the timing. It says intentionally misstating the financial statements, okay, for whatever reasons, is fraud. Intentionally misstating the financial statements. Now, for example, why would a management of the company do it? So if I go back to this example here of shareholders and management, the management of the company wanted to show to its shareholders that they are performing really, really well. They are growing, they are performing really well, and accordingly, they inflated the sales figure. They unnecessarily, increased the sales amount while the actual sales was not very high. So this management can do. Okay, or let's say I'll give you a few more examples. Let's say management made the financial statements, okay, and they did fairly well this year, and they earned a very decent profit. But on the profits, they saw that hey, we have to pay so much of taxes. We have to pay so much of taxes, right? So what they did, they booked some fake expenses in their books. Now, when they increase the expenses, the profits will go down, and consequently the tax amount will go down, right? So now they have done it intentionally. So it is a case of fraud. So when misstatements happen, please understand, misstatements can happen in the financial statements either intentionally or unintentionally. When it happens intentionally, when the management does it on purpose, we call it as fraud. And when it happens unintentionally, we call it as error. So error is an unintentional misstatement. Okay, fine, great. Okay, all right, guys, fine. Now, so we what were we discussing? I was trying to teach you true and fair view. Okay, and under true and fair view, again, let me tell you, when will the financial statements give true and fair view? The financial statements are going to give true and fair view when the financial statements are prepared in accordance with the FRF. You can say this also, or you can also put it in this way: when the financial statements are free from, now see the word, it says when the financial statements are free from material misstatements. But up until now, as of now, I have only taught you the word misstatements. Not taught, rather we have just discussed the word misstatements. So what does it meant? What is meant by material misstatement? So let us understand the word material now. Okay, and then again we are going to come back to this and discuss things. Okay, so I believe every one of you are clear with the concept of misstatement. What is the concept of misstatement? Misstatement means anything which is wrongly stated in the financial statement. Okay, now what is meant by material misstatement? Please be attentive now. This word is very crucial for your overall understanding. Okay, so what is meant by material? Let's understand. It says misstatement in the financial statements. Misstatement in the financial statements are material when they can reasonably be expected to influence the decisions taken based on those financial statements. So something would be considered as material if if it is able to influence or change my decision. as a investor, as a shareholder, as a customer, as a user of financial statement. So what, probably I'm just reading the definition now. I'll tell you, I'll explain the concept, don't worry. So what is misstatement? What is material, guys? Misstatements in the financial statements are material when they can be reasonably be expected to influence the decisions taken based on those financial statements. Now what do you mean by this? Okay, in simple words, guys, okay, in simple words, material means something which is really very significant. Material means significant. Material means something which is really very important. Okay, now I'll give you few examples. Let's say, very basic example, let's say the total, we are doing the audit of a company, the total of the financials is 10 lakhs. I mean, the total of, not the financial, sorry, the balance sheet is 10 lakhs. Okay, asset side is 10 lakh, liability 10 lakhs. Okay, now inventory alone, out of the total assets of 10 lakhs, inventory alone is 8 lakhs. Okay, now inventory, if inventory alone is 8 lakhs, this is something which is very material, which is very important, very significant, because it constitutes as, let's say, almost 80% of the financial statement. So we are going to call this as something really very material. Okay, however, now, okay, I'll take few more topic, basically examples. Okay, I'm just discussing the word material first. Okay, now let's say, let's talk about the case of Reliance. Okay, Reliance Industries, you all know, huge company. Okay, now I am the auditor of Reliance, let's say. Okay, just a hypothetical example. Okay, I'm not the auditor, I'm just giving you an example. So let's say I'm the auditor of Reliance, and in the, while auditing the, financials of Reliance, I came across this figure that, okay, 1,80,000 rupees. Okay, there is, I found some mistake with respect to a payment made, to the tune of 1,80,000 rupees. 1,80,000 rupees. Okay, however, considering the, big company Reliance, wherein their total of the financials runs in thousands of crores, 1,80,000 is not a very big amount considering Reliance. Okay, and if there is a mistake amounting to 1,80,000, perhaps it would not change a shareholder's decision whether he wants to buy the shares of Reliance or not. It would not change, influence the decision of the bankers. It would not influence much the decision of the government, because the figures of Reliance, it runs in thousands of crores, and just 1,80,000 figure probably might not be very material for Reliance, right? So what is material? Please understand, material is when, it says misstatement will be material when they can reasonably be expected to influence the decisions taken based on those financial statements. So when it basically changes the decision making of a user, it will be called as material. Okay, now in this case probably, if the auditor says that inventory is misstated, let's say they have valued the inventory on LIFO basis rather than FIFO or weighted average. Now in this case, I, as a shareholder, I as a prospective shareholder now might not be interested, much to invest here. Why? Because inventory itself is misstated, and inventory almost amounts to 80% of the, total assets of the company. So here probably my decision might change. Hey, who is going to? We should avoid such companies. Okay, but in here, even if there is a misstatement of 1,80,000, it will not impact overall the financials probably of Reliance, and it will not impact the decision making of users. Hence, it will not be a material amount there. Okay, but yeah, we are not yet done with the concept. Let's understand, guys. So this is a very important line. Misstatement can be material either by magnitude. It can be material either by magnitude or due to the nature of the item, or due to the nature of item. Now please understand, coming back to this example, this misstatement in inventory is material. Why? Because of the magnitude. Out of 10 lakhs of the total assets, 8 lakh itself is misstated. So because of the magnitude, I say that this item of inventory is very much material. It's very material. Why? Because of the magnitude, because of the value. However, I wish to, draw your attention to this, that materiality is not always on the basis of the magnitude. Okay, I'll give you a few examples. Be very attentive, guys. Okay, so let's discuss it in this way. Okay, I'll take this example only again. This example, yes. Let's say inventory is okay, everything is okay. In this company's case, okay, the management of the company, please understand, the management of the company, the director of the company gave a loan of 20,000 rupees to his son. Please understand. Who puts in the money in the company? All the shareholders put their hard earned money in the company. Yes. And the company is run by whom? The directors, the management. But what did the management do? Manage out of the money they receive from shareholders, they have taken money. One director took money and gave it to his son for his personal use as a loan. So the amount is not much. Okay, but this transaction becomes very material. By its very nature, this should be brought to the attention of the shareholders. Hence, this transaction also will become material. So, students, my friends, don't think that anything which is high in value or which is, very because of the magnitude will be material, but small things can also be material based on their nature. Now, this is a transaction done which should, it's a related party transaction. Okay, let's say the money was given to the director's own son. uh, so it's a related party transaction, so ideally shareholders should be knowing about this. Ideally the disclosure of it needs to be made. If the disclosure is not made, it is a misstatement, it's a material misstatement. Okay, even though the amount is small. All right, so please understand, misstatements can be material either by magnitude or due to the nature of the item. So misstatements can be because of the magnitude or it can be because of the nature of the item also. Okay, now again let me just give you a very simple example to make you understand the concept of materiality. Okay, now let's say guys, uh, this watch that I am wearing. Okay, let's say hypothetically I'm saying, let's say this watch uh, is of 3 lakh rupees. 3 lakh, yes. Okay, so this watch is of 3 lakh rupees. Now if it is a 3 lakh rupee watch, of course I'll pay very special attention always. I'll take care of it, I'll put it properly when not using it. It's a 3 lakh rupees watch. Okay, so it becomes, by default it becomes material to me because it has a very high value, right? So I consider it as material. Okay, however guys, I did tell you this, that it's not just that you are going to consider materiality only with respect to magnitude, right? It, something can be called as material by its nature also. Now imagine this watch. Okay, not very much in fashion, very old, almost 50-60 years old. If I go and try to buy something like this, it will just come in 300 rupees also. But this watch was gifted by my grandfather to my father, and then my father gave it to me and he told me to, this is something very important emotionally also, please take good care of it. Okay, and it's like more of a responsibility. Okay, so now even though this watch, if I buy a new watch, it is of 300-400 maximum, but this watch, because it came from my grandfather to my father, from my father to me, this is something now very material to me. Okay, emotionally also I'm very much attached to this watch. So what I'm trying to tell you, misstatements, okay, let's come down to the language of misstatements now. It says misstatements can be material either by magnitude, okay, or nature of the item. It can be on the basis of nature of item also. Okay, all right, so I guess guys, now you have understood the word uh, misstatement, you have understood the word misstatement, and you have also understood the word material. However, let us now consider them collectively. Material misstatements. Material misstatements. I'm reading this line again. Very important. Please be attentive, everyone. Financial statements will give true and fair view if they are free from material misstatements. If they are free from material misstatements. If the financial statements are free, if there are no material misstatements in the financial statements, then I will say that the financial, then I as an auditor will express an opinion that the financial statements are giving true and fair view. Okay, now what is the logic, what is the concept behind this material misstatement, guys? Be very attentive. Okay, see guys, I told you, okay, I'll give you one simple example. Any company, let's say 31st March, let's take the example of 23. The financial year ends on 31st March 2023. Okay, and then we start with the auditing part. We are going to audit the financials of pertaining to the financial year, uh, 1st April 22 to 31st March 23. We are going to start the audit somewhere once the year ends, okay, after the financial year. Now, all of you know this, that the AGM of the company is should be held within, let's say, 6 months from the end of the financial year. So maximum by 30th September of this year, the AGM should be held. Yes, and in the AGM, all of you know this, that the four businesses that are to be there always: ADDA, appointment of auditors, directors, declaration of dividend, and then adoption of the financial statement. Okay, so what I'm trying to tell you here is we are not left with much time, guys, to complete the audit. Okay, so ideally, let's say 30th September is the AGM, and you all know 21 clear days at least. In we have to send the company has to send the notice, and all the financials, etc., to the shareholders, right? So let's say we have to complete the audit. We have to complete the audit by 31st of August. So ideally, April, May, June, July, August, I have 5-6 months to complete the audit. Now imagine if I'm doing the audit of a company like Airtel, a big company, it's not possible that I go through all the transactions in those 5 or 6 months of time. And in those 5-6 months of time, I will not devote all my 6 months to one company. Okay, I have my practice, I have my other clients also. So what I'm trying to tell you is, auditor, when he is doing the audit, when he is trying to find misstatements in the financial statement, okay, when he is checking the financial statements for misstatements, he will not be interested in looking for all misstatements. He would only be interested, he would only be focused on checking material misstatements. Material misstatements are those misstatements which are significant, which can change the which can influence the decisions of the users of the financial statements. Okay, so please understand this line. Since it is not practical for the auditors to detect all the misstatements, auditors, when they are doing the audit, they will not be able to detect or find all mistakes in the financial statement. Since it is not practical for the auditors to detect all the misstatements, they will focus their work on detecting which misstatements, guys. They will focus on detecting material misstatements only. Okay, so let me repeat this line again. Since it is not practical for the auditors to detect all the misstatements, they focus their work on detecting material misstatements only. Hence, if I am satisfied, if as an auditor I am satisfied that the financial statements are free from material misstatements, I would give an opinion that the financial statements are giving true and fair view. Okay, so again, when will I say that the financial statements are giving true and fair view? Number one, guys, I will say when see, there are two ways of answering this. When number one, when your financial statements are made in accordance with the FRF. When the financial statements are made in accordance with the FRF, then I can give true and fair view. But when, of course, when the financial statements are not made in accordance with FRF, that means there is a misstatement. Yes or no? Read the definition of misstatement again. It says, when misstatement include any difference between what is required by FRF and what is actually recorded in the financial statement. So if things are not as per FRF, then anyways it's a misstatement, right? So don't get confused. What I'm trying to tell you is, a financial statement will give true and fair view when it is prepared in accordance with the applicable FRF, when it is made in accordance with Schedule 3, with the requirements of complying the requirements of all the AS, Ind AS, etc. There is one more way of putting this up is, I would give a report that the financial statements are giving true and fair view when the financial statements are free from material misstatement. And when will the financial statements be free from material misstatement, guys? When, ultimately, when they are prepared, I'm writing it in short, okay? When they are prepared as per FRF. Ultimately, these are the things that we have to remember. So, last thing, just to conclude, guys, when will the auditor give true and fair view opinion on the financial statements? On, when will he express that the financial statements are giving true and fair view? He will give an opinion that the financial statements are giving true and fair view when the financial statements are free from material misstatements. And when will the financial statements be free from material misstatements? When they are prepared in accordance with the applicable FRF. What is the applicable FRF? FRF means financial reporting framework. Okay, so I hope you have understood the meaning of the words misstatement. You have understood the meaning of the word material. I have told you this, tried to explain you this very well, that something can be called material not just because of their magnitude but also because of their nature. Okay, don't worry at all, guys. We have an entire chapter on materiality. We have an entire standard to be covered. Okay, so again we are going to discuss all those things. Misstatement also, we are going to discuss this in a lot detailed manner. At the moment, I'm just trying to explain you things in very layman's terms so that you have a good insight about all those things. Okay, all right, guys. Now, um, we are done for the day. We have understood a lot of terminologies. In the next session, and probably one more session, we'll still be continuing with the fundamentals part. Two more sessions would be required to complete the fundamentals part. In the next session, we'll be covering with the concept of internal controls. We'll be covering with other very interesting concepts, and I shall also be starting with the concept of audit process, how the entire auditing is done. Okay, so yes, see you all in the next session. And again, let me remind you, maintain consistency when you are watching the lectures. Generally, students in the beginning of any subject, they are very much, enthusiastic. They are very much, excited about this subject. But then, you know, you don't take a break in between. Just watch them in continuity. All right. Thank you so much, guys. I'll see you in the next session.